sector are seeing a very good, strong growth demand order book position. Also in the other pipe segment, which is like the plastic pipe segment also, I think the demand has picked up substantially because of the demand in housing. Overall, the investment, capex cycle and infrastructure investment across segments, be it oil and gas, housing, water, I think all these have resulted in a huge demand pickup for the pipe segment. What we saw in the first quarter and earlier part of last couple of months is that the margins were impacted, both because of higher raw material costs across the segment. If you see in terms of, metal prices were high. Also in PVC, while the price had come down substantially, it had impacted inventory cost. So basically, margins were impacted across the board. But things are improving now. And I think in the second half, margins should also improve, both with metal prices coming off, as well as now PVC prices having stabilized. So I think the company should do much better in second half. Coming to stock specific, my topic in the steel segment would be Maharashtra Seamless. If you look at the numbers, despite the difficult times, challenging times in terms of raw material costs, the company did very well. Both in first quarter, I think the good performance is likely to continue. Also, the balance sheet is very strong, and as you mentioned earlier, that the debt repayment, it's already low debt, and the debt repayment continues. So I think in terms both in valuation as well as in balance sheet quality, I think that would be my top pick.
Right. Thank you so much for the view. Let me bring in Kunal. Good morning, Kunal. What are the charts looking like? Steel stocks have already seen a run up, and what is the kind of upside that you're seeing? Any specific stock that is looking attractive to you?
So good morning, Ankita. Good morning, everyone. My belief is that the pipe stocks, and specifically towards the one of the stocks which has looked very attractive from the 2020 lows, is actually Prince Pipe. The stock has done fabulously well. So from being a stock which was almost at 80 rupees, 90 rupees, to rising up almost 10 times to almost 800, 850 mark somewhere in 2020, 21. And then from there on, the stock has consolidated. So it's going through a time-wise correction. These kind of stocks which move up 5x to 10x in a very short span of time, they can get into a multi-year of consolidation. But if you get these stocks closer to the retracement supports, that's a good level to try and enter into the stock. So for someone who has a longer term kind of a time horizon, I would expect Prince Pipes to be a good accumulated stock at current levels. 575 is where the stock is trading right now. At current levels, or maybe another 10% dip is where I believe that major part of the quantity needs to be bought into. I would believe that possibly in the next 2 to 3 years, once the trends restart for the stock price, it could probably cross back about the levels of 850 and go beyond that as well.
Right, Kunal, and Kunal's pick is coming in for Prince Pipes over there. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with your stock-related queries. We'll be taking all of them, so don't go anywhere.
आग को फैलने से रोक। voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although it's difficult to predict, return will be more than 10 lakh.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index buying momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere.
Welcome back, and you're watching Buy Now Sell Now on ET Now. And before we start with the query segment, Shaina, I'm actually going to come to you because, there's a lot of volatility in the market, given the fear that is going on globally also of the recession coming in. People are worried on the street as well. What should an investor actually do to protect themselves from any volatility so that, you do not make any huge losses? What should one be looking at and what should one be doing?
Firstly, I would advise that investors avoid companies which have a high debt. So it is better in these volatile times to invest in companies which have a strong balance sheet. Because in case there is any adversity, I think these are the companies that pull through. Secondly, I would prefer larger cap, stronger companies in these volatile times with lesser exposure to Europe. Because I think the major problem is, what we hear, Europe is likely to face, bigger problems than maybe the domestic related companies or even US. US market, while is going into a recession, I think will pull through much better than Europe because of the issues in terms of manufacturing, high cost of power. So I think one needs to be selective in the type of companies you're investing. Look at companies which don't have too much of imports of raw materials, which are domestic oriented, which have low debt and strong balance sheets, and which have done reasonably well in the last couple of quarters, which of course were challenging times both domestically as well as internationally. So I think one should focus on the numbers that come out and carefully invest. I would suggest to be at least 15 to 20% in cash. Don't put all your money as of now, and invest gradually over the next couple of months, in a systematic way so that you can ride out the volatility.
Okay, invest gradually over the next couple of months in a systematic way is what Shaina is saying to avoid the volatility. But then viewers, let's get started with all your stock related queries, and to viewers who are joining us for the first time, you can send us your queries either on the YouTube, Twitter link as well as on our WhatsApp number as well, which will be flashing on your screens. Let me get started then, and Kunal, I'm going to start with the first query coming to you. We have Mr. Karminder from Punjab, who's asking about Tata Motors. They have Tata Motors shares at 395 shares at 225. What is the view coming in on Tata Motors? A short-term view is what they're looking at, 1 month time period only actually.
So short-term wise, I would suggest or I would expect Tata Motors to underperform. I think it's been an underperformer in the last 4 months, 5 months of the entire auto trend, where on one hand you have large cap names like M&M, Maruti, Eicher Motors. So whether it's two-wheelers, four-wheelers, they've managed to pick up pace, but Tata Motors has underperformed. And it seems like that the selling pressure is still intact into the stock price. Maybe the stock can correct another 15-20 rupees, say 375 approximately, could be a possible near-term target for Tata Motors. So if you're looking at an immediate downside, I would expect possible 375 as a moderate downside for Tata Motors.
And let me bring in Shaina for this query. This comes in from Deepak from Bombay. He's asking, he's bought 100 shares of L&T Technology at 4,450, and he wants to know what is the long-term prospect for it, a one-year view for the stock. Should he hold it or should he sell? Shaina.
Well, L&T Technologies is one of the more expensive stocks in the segment. I would prefer, maybe a KPIT Tech, which is a smaller mid-cap company, or in the large caps, I would prefer a TCS. I would prefer to stick to the best.
Okay, Kunal, the next query we have is coming in, and this one is on Jaicorp. We have Monish from Bangalore, who is holding 100 shares of Jaicorp at around 58 rupees. What's the short-term view? Do you track this, Kunal?
Yeah, I do track it. I think if you bought at 58 rupees, the stock has already given you 3x, more than 3x returns at 190 approximately, 89 is where the stock is trading right now. I think it's a good time to book out profits over here. And one of the reasons for that, I would believe, is the divergence the stock has started to show on the RSI. So in the last 2 months or 3 months, when the stock has rallied from 2 digits or 3 digits, 100, 120 to 200 rupees, the RSIs have started to make a new low, for themselves, at least on a relative basis. This indicates that you could probably be expecting the stock to get into a corrective phase. So it's prudent enough to try and book out profits. If you want to re-enter, then I believe 160 or maybe 130 mark could be a good range where you can look to re-enter the stock.
Right. Shaina, over to you again. Tina from Mumbai wants to know, she holds 100 shares of Solar Industries purchased at 3,850, wants to know about the long-term prospects of the share.
Solar Industries, I would say that in terms of the shorter term as well as medium term, the stock is looking pretty bullish. It's in a segment that also is very much in, I think, the sentiment positive. One could, even add at current levels. You could add keeping a stop loss of 3,400 with a target of 4,400.
The next query we have is coming in from Saudi Arabia. Kunal, this one is for you. Yoga Rani is asking whether they could look at buying United Spirits and Federal Bank at the current levels.
So I think both these stocks are good, positional bets. Also, I think the best part about these stocks is the moderate beta nature of these stocks. So when you are into a very high volatile market condition, it's always better to try and look out for moderate beta stocks because they are less prone towards vicious market corrections, and that's where these stocks stand to outperform. So I think if it's a very short-term kind of an adjustment, then yes, it makes good sense to try and look out for both of these names. For United Spirits, from a short-term play, I would look at maybe 880, 895 as a potential target range. For Federal Bank, the target range could be around 130 to 133 mark.
Right. Shaina, there's another query for you. It's coming in from Sam. Sam wants to know, after the bonus issue of GAIL that was done in July, he holds 900 GAIL shares at an average price of 100 rupees, wants to know about the future prospects.
If the question is for me, I would recommend that he switches from GAIL. I think the sector is going through tough times with high gas prices. I would prefer moving into, say, a banking stock like an ICICI Bank.
Shaina, actually, I'm going to come back to you again. Ramesh, sorry, we haven't been able to take your query for the last couple of days. But Shaina, this one is coming in from Indian Hume Pipes. Ramesh is holding 500 shares of Indian Hume Pipes at 249 rupees and 100 shares of Bombay Burma Trading at 1,495 rupees. How are you looking at the prospect of both these stocks for a long term?
I would suggest that, the investor Ramesh switches out from both these stocks. Bombay Burma is actually just going in a very in a consolidating phase, though he's made good money, so he can book some profits on Bombay Burma. And in Indian Hume also, I believe the stock is actually facing some issues in terms of the medium to shorter to medium term prospects. So I would switch from both these stocks.
Right, over to you, Kunal. There's Priyam from Mumbai who wants to know about PVR. He says that he's bought PVR. He says that despite good movies coming in, there is no movement in the stock. Now, he is long on it and wants to know the near-term prospects for the stock.
So I would believe 1600, 1650 is a good support for PVR. You have to look out for zones where the stock eventually takes a support. There is a demand which comes back, and sharp corrections, they generally tend to hold. And that for PVR is around the 1600, 1650 mark. So you can have a bullish view on the stock till the time the stock holds above the 1600 to 1650 zone. And if you're looking to buy or accumulate, I think even this zone could be a zone where you can look to maybe average as well.
The next query is on data patterns. Shaina, Keshav wants to know how is data patterns looking for a long term. They've bought it at around 70 rupees. They're holding 775 shares. So what should they be doing?
Well, data patterns looks decent at current levels. And I think you can continue holding the stock. Maybe keep a stop loss of, somewhere close to 970, and you can hold it with a target of 1,300.
Okay, Kunal, actually I'm going to come to you, and what we have is the next query coming in is on this one is on Sanofi and Abbott. Now, what Sunil Ji from Muscat is asking is that, is it a good time to invest in this MNC pharma companies? Would you be suggesting these names?
Well, I think it's an interesting question because, most of these MNC pharma companies, they are not at their, major highs for themselves. Now, even this market correction, these stocks are already going through a very sharp kind of a downtrend. Now, Sanofi, for example, the stock had broken below its 200 DMA, almost, I think, 10 or 12 months back in October 2021 or just slightly after that. So from there on, the stock has corrected very sharply, more than 30%, and it's still going to a very sharp kind of a sell-off. If you are looking at it from a long-term play, then it makes sense to start buying on dips at current levels, because the stock has been consistently trading below its long-term averages, and there's bound to be some sort of a catch-up which could probably play up into the stock price. But a much better chart and a more confident looking chart would be Abbott India. I think that stock is looking quite strong. I think at 18,300 levels is where the support is for Abbott. So I think if the stock holds on to this on a weekly basis, you can expect a reasonable bounce coming into these names. So both of these stocks are completely different. Abbott is the more stronger charts, and Sanofi is what you can look out for buy on dips.
Right, Shaina, I'll bring you in on this one. Archit wants to know, he's got 150 shares of Nykaa at 1,580. He wants to know the long-term prospects for the share.
The question is for me?
That's right. Shaina? Trying to get in, Shaina?
See, for Nykaa, I believe the stock is overvalued. It's expensive, so I would avoid buying. At the same time, there is a bonus that has been announced, and the record date is 3rd of November. And the bonus share is like 5 shares for every 1 share held. So that could keep the stock in limelight for some time, but I would avoid buying the stock as of now.
Kunal, the next query we have is coming in for you, and what I'm looking at is this one is coming in from Siddharth from Bangalore. They're holding Suzlon Energy. It's not a stock that we talk about every day. They bought Suzlon Energy at 5,400 shares at 8 rupees. Should they continue to hold this or sell?
I think you should look to exit the stock. No point holding on to these names, and that too in an environment where the markets are, as it is, a lot more uncertain for themselves and extremely volatile. So I think in that regards as well, I think it makes sense to exit the stock.
Right, and Shaina, there is Matthew coming in from Kochi. He wants to know that he has 140 shares of Info Edge purchased at 4,550, and he's currently suffering a loss of 17%. He's a long-term investor, and he wants to know if he should sell, hold, or average at current price.
Well, I would suggest he averages, holds currently, but not at current levels. Please wait for some time, because the stock does look like it's in a corrective phase. But I think long-term prospects remain very strong in terms of valuation. So I would average closer to maybe 3,600. I would suggest he averages on dip, not now.
The next query we have is coming from Ravi Teja from Hyderabad. Kunal, this one is on SAIL. What's your short-term view about SAIL? If someone is making about a 5% profit, should they continue to hold this? So
I would suggest to hold on. Now I understand that SAIL is a bit of a high beta stock, at least over the last 1.5 or 2 years. The stock has changed its behavior. But then the charts for many of these metal counters have started to look very attractive, at least in terms of indicators. So indicators give the first signal that a stock is about to get into a reversal trending mode. So I think that has already happened for many of these metal names. I would be bullish on SAIL, and if you're already sitting in profit, I think you should hold on.
And it is time for us to slip into a short break. You don't go anywhere, as we will continue with our guests on your queries.
Where you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot.
Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here on ET Now with
trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free. When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long-haul FII who looks at India as still a promised land for a consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
Here at ET Now, I've been getting you bit by bit.
The voice that instills trust.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going then with all your stock-related queries. Kunal, I'm going to come to you first. Now, here we have a query coming in from Mr. K.R. Acharya, and he's a retired person, a small investor. Now, they have bought Piramal Enterprises at a market price of around 800 rupees per share with a 6-month time horizon. What should they be doing? Should they continue to hold this, or how are you looking at this one?
So I would suggest to hold on to the stock now. I understand that Piramal had gone into a special situations about a month and a half out back. and post that the stock has gone through a correction kind of a mode from 1050, 1100. It has corrected towards 800 mark for itself. But then the indicators so far have come back into a deep oversold territory. So it's a matter of time that possibly the stock can also get into a bounce from current levels. So if it's a short-term view, I would suggest to hold on and possibly look out for maybe an 840 to 860 kind of a very short-term kind of a target range.
Right, Kunal, there's some good word coming in from Mr. Ashok. He says he's thankful to buy now, sell now, which has given him knowledge over the years. And he has a query for Shaina. Thank you for the kind words, Ashok, firstly. And there's a question for Shaina. He asks that he wants to know that he wants 3 stocks from the small cap sector for the long term. So, Shaina, what are the three picks for Ashok?
You can look at a banking sector if it's looking specifically for small cap. A banking sector, something like a Federal Bank, that looks decent at current levels. You can look at something in tech, which is KPIT Technologies. That looks decent for the medium to longer term in the small cap space. And maybe in FMCG, you can look for something in the smaller cap space.
Kunal, this next query is coming to you, and this one is coming in on the Nifty index actually. So Krish from Chennai has a question where he's saying that he's fully invested actually into the large and mid cap space. But is it a good idea to have a portion of in the Nifty index where returns is moderate but also less volatile, something that he's looking at?
So I'm not sure what exactly are you looking out for, just the index in terms of the futures or as a basket of the Nifty 50 stocks. Even if it's a basket of the Nifty 50 stocks, I would still believe that they can stand to outperform given the kind of market scenario we are into, because in tough times or in volatile times, the index tends to outperform majority of the stocks. Especially when the markets are going through a very sharp correction. If it's with respect to Nifty 50 in terms of index, my sense is that we are going through a very contracted kind of a range. Earlier, the range was almost 1,000 point for the Nifty, 17,000 to 18,000. That range is contracted towards 17,000 to 17,400, 450. And right now, in the last couple of days, the range has contracted further towards 17,000 as a base and 17,200 as a resistance. So we are nearing a point where the markets would eventually start getting into either a breakout or breakdown mode. You have to be patient enough for the index to try and give you those signals of which side the index is breaking out or breaking down. If we break substantially below the 17,000 mark, that's a good point to try and initiate fresh shots. Otherwise, you can hold on to your longs.
Right, Kunal, I'm going to stick with you here. There is a question coming in from Weber. Weber wants to know he holds a Divi slab and which continues to fall. His buying price for 30 shares was 3,750. He wants to know if he should add more at the current levels.
So I would suggest not to add or average at current levels. Now I understand that Divi slab as a I think the last 1 year approximately the stock has seen a very sharp correction. The highs for Divi slab was more than 5,200. Now it's at 3,500 levels. It has a very good history prior to that where the stock has given compounding returns for a year on a year-to-year basis. But then right now the structure has changed for Divi slab. It's going through a correction, then a mild rally or a bounce, and then the correction starts to come back again to the stock price. This has been the pattern for Divi slab in the last 6-7 months at least. So looking at the recent pattern, I would expect the stock to correct at least another 200 to 250 points further. If you have a buy and dips if you can go for a buy and dip strategy and with a longer term time horizon, then it makes sense to start buying at current levels, maybe 20% of your expected quantity at current levels, and then keep adding on every 200 points dip.
Shaina, this next query we have is coming in from a senior citizen, Mr. Kiran Chopra, and he's from Lucknow. He's asking, as a long-term investor who has a 3 to 5 year view, he's invested in the banking sector and would like to furthermore have increased the weightage in the banking space. And now he has given names like ICICI Bank, SBI, HDFC Bank, Axis Bank. What should he be looking at in terms over there? Which one would you be suggesting in that terms?
In the banking space, as I mentioned earlier, my topic would be ICICI Bank. I think it's very well positioned in the private sector. One can add SBI if you want to be in the PSU space, but I would still prefer some of the private sector banks. Even HDFC Bank is a preferred bet over SBI. So that would be my order and preference for the large caps. Smaller caps, as I already mentioned, you can look at something like a Federal Bank, even something like a DCB Bank is now reviving from, that huge consolidation phase that we saw.
Right, Kunal, I'll bring you in now. Manish wants to know if this is a good time to buy Zomato and Trent for the next 3 months at the given current market price.
So maybe not for 3 months, but for say if you can expand your time horizon to at least 1 year or more, then I think it makes a lot of sense to buy these names. Zomato specifically, I think around that 60 odd mark has seen a good base building process. So if you can probably try and average it out and time it just around that 60 levels, the risk would be a bit more better for Zomato. Even for Trent, I think the stock has done reasonably well for itself. It's performed, I think, quite exceptional in the last 4 months from June lows, where the stock was at 1,000 to 1,500 levels. Again, have a buy and dip strategy, but again, the more important part is not the buy and dips, but it's the time horizon. You can't, if you are looking at it from a 3-month perspective, I don't expect any major returns, but if you can expand your time horizon to 1 year plus, then the returns could be quite substantial.
Shaina, this next query we have is coming in from Jay Kishan from Gwalior, and they've bought 2,000 shares of Bajaj Consumers as 190 rupees per share. What should they be doing with this? Should they continue to hold this? They're making a loss on this one. Shaina.
You asked about Bajaj Finserv.
Bajaj Consumers.
Bajaj Finserv is a stock that one can continue holding as of now.
Shaina, it's Bajaj Consumers. Bajaj Consumers. Shaina? Shaina, it's the stock is about Bajaj Consumers. Jay Kishan is holding 2,000 shares of Bajaj Consumers at 190 rupees. Should they continue to hold this one?
Bajaj Consumer looks like decent bet from at current levels, and he can continue holding it. Though he may see some bit of a dip, but I think one can hold, keep a stop loss, at close to about 140, and then you can look for targets of close to about 180. But you could see a bit of consolidation for some time.
Right, Shaina, I'm going to stick with you there. This question is coming in from Akash. Akash says that he has 31% of his portfolio in banking stocks of ICICI Bank, IDFC Bank, First Bank and IndusInd Bank. He wants to know if he should add more financial stocks or choose housing products or defense. Could you suggest one from each segment?
I would add defense to the whole portfolio because he already has 3 banking stocks. Maybe you can add another small cap banking stock, Federal Bank. In defense, you can add, I think HAL is doing, Hindustan Aeronautics is doing pretty well. I think defense sector, the order book position is also good. So you can add Hindustan Aeronautics. You can add some other stock in terms of some other sector, engineering sector. You can look at IT. So there are a lot of other sectors he can add. But I think his banking portfolio is sufficient.
Kunal, this next query we have is coming in for you, and this one is from Shubha from Chennai, holding PSC shares at 814 rupees and Godrej Properties at 1,507, making a loss in both these. What should they be doing?
So Godrej Consumers, you should look to Godrej Properties. You should look to add at current levels. I believe that stock has come back to a deep oversold territory on the weekly chart, so that's where I believe the positioning could be a bit more better. BSE, on the other hand, I think is something which you can just continue to hold on. As of now, the charts are not showing any major signs of a bottom formation, but a better perspective, would be looking at CAMS. I have been highlighting the stock in the last couple of days. That's a much better alternative because the stock has given signs of a breakout on the upside. So you can either hold on to BSE and look to add additional quantity in CAMS as well. For Godrej Properties, you can look to average at current levels.
With that, let's get started with the rapid fire. And Shaina, I'm going to start with you with the first query. And Sudhin Kumar from Ranchi is holding NMDC. He has NMDC at 131 rupees per share. What's your long-term view on this one? Should they continue to hold or exit?
Yeah, he should hold.
All right, next question is for you, Kunal. Your view on Thermax. What are the charts telling you? Shiva wants to know if you can accumulate slowly or anything. Is there anything fundamentally wrong?
So there seems to be something which is wrong to the stock. It's fallen quite sharply in the last 2 weeks from 2,600 to 2,000 levels, I would suggest to avoid the stock at current.
Okay. Satya from Kerala is holding EIH, which he's bought at 194 rupees. China, should they continue to hold this one or switch to Indian hotels?
He can continue holding at current levels. I don't see any problem. He can also add Indian hotels. That also looks good.
Okay, Kunal, coming to you, we have the next query coming in from Ramesh from Qatar and would like to know whether they can buy CDSL and CAMS for a decent period of time and longer time.
So I would suggest go for CAMS. That's a better chart as compared to CDSL as of now.
Shaina, this question is for you. Jignesh wants to know, he has 300 Biocoin at rupees 400 since 1.5 years. What should he do with it?
Biocon is looking a bit weak at current levels. I would suggest that he switches from Biocon to Cipla.
Okay. The next query we have is coming in from Kashyap and wants to know about Onward Technologies. Should they continue to be looking at this one coming in, Shaina?
I think I will pass this question.
Okay, Kunal, would you have a view on Onward Technologies?
It's a very thinly traded counter. Even today, for example, the liquidity is just 5,000 odd shares. You should avoid such counters.
Right. Kunal, also Saroja wants to know, she's holding 50 shares of EKI Energy. Should he hold or sell?
Apologies, don't track the stock.
Okay. Question for Shaina. Shobna wants to know if Laurus Labs is a good buy fundamentally. If yes, can she accumulate at the current market price?
I would avoid adding at current levels. Avoid.
Okay. With that, we're absolutely out of time on the query segment today, viewers. But thank you so much, Kunal, as well as Shaina, for joining in with us. And viewers, don't go anywhere. We'll just slip into a very short break. And after this break, we will be back with more news.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
think, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. What can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply
The Nifty
higher.
Bank Index is
Buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio.
Welcome back. You're watching Buy Now, Sell Now. Infosys is all set to come out with its Q2 earnings. Revenue growth is expected to be led by a mega deal ramp up. Let's go across to our colleague Anisha for more details on this. Anisha, over to you.
Well, the Q2 earnings season has been a tad bit mixed so far. While TCS was a good number, HCL Tech was definitely a beat, and Wipro was a subdued set of numbers. From Infosys this time around, the street is expecting a decent set of number to come by, because in terms of dollar revenue, we're expecting a growth of 3.2%. Rupee revenue is expected to jump up by almost 6%, and even on margin front, we're expecting an improvement of around 40 basis points, so that the number comes closer to 20.5%. Even if you look at the constant currency growth, it's expected to be around 4.8% this time around. So quite a solid growth is what the street is expecting. However, we'll have to look by in terms of what the internals are, what's the management commentary regarding the European business, the BFSI vertical, as well as the retail segment of the company, because the street is expecting that the second half of the year might be a bit slower on account of seasonality, plus the furloughs that we're likely to see in Q3. Separately, the deal win momentum is also expected to be a bit subdued at $1.5 to $2 billion. However, in terms of the guidance, the street is expecting that the guidance would be unchanged. Remember, at the start of the year, they had guided for a revenue growth of 14 to 16% and the margin band to be around 21 to 23%, though they had said that the margin will be towards the lower end of this range. Other than that, the street will watch out for the buyback announcement for sure. Remember, the company had told that they'll look at a buyback announcement as well, and the street is expecting that it will be at least 10,000 crore or more. There is, ample room available in terms of the cash on books, which stands at around 35,000 crore rupees. So buyback announcement will also be the key. Plus, the deal pipeline coming in from manufacturing vertical will be something that we'll watch out for, given that TCS had called out that manufacturing vertical will be the worst hit if the European crisis really worsens.
Okay, Anisha, thank you so much for that, and we'll surely be keeping an eye out on the Infosys earnings. But with that, we're absolutely out of time on this edition of Buy Now Sell Now. Thank you so much from Ankita, myself, as well as the team who put the show together. Don't go anywhere. Markets at noon will take the action forward.
With unmatched experience and analysis from our market experts.
In the market, right here in 80 now. With
trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long-haul FII, who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader.